Okay, just before we, this is of course a developing story, but an important one to keep an eye out for. Look at that move on Jubilant Life, 15.5%, 368 and counting. So a sharp uptick. We're seeing that happening in a lot of stocks, by the way, in the session today, which of course is also trending and almost looking like ending close to the high. 7466, up about 100 odd points. New listings are not doing too badly. Quick Heal is up 20%, 236. So a lot of these stocks are buzzing around in trade. On cue, Manav Chopra, he's head of technical analysis at Monarch Network Capital, joins us right now on the show as well. Manav, good afternoon. Thanks for joining in. Have you looked at Jubilant Life recently? It's up about 15 or 16% as we speak.
Yes, in fact, I was just looking at it some time back. If you look at this chart of Jubilant Life, the stock actually has been consolidating around its long-term 200 DMA since past over one and a half month, and such kind of a consolidation at important long-term support indicates that the stock is trying to gain some momentum and a smart accumulation pattern. So looking at the overall formation, the kind of a breakout that we've seen today, it's basically the stock has resumed its uptrend, and from here on it is quite likely to go higher and possibly even exceed its previous peak of 450, which will possibly happen in next few months. So I think one should definitely look to buy this stock at the current levels and on dips towards the 330 on the lower side. And for a medium term, long term perspective, this stock should ideally be testing 500 in next few months.
Well, yes, indeed, big move coming in on Jubilant Life. L&T is the other one. We've already spoken about that stock, but look at the move in the session today. It's really leading, as Sandeep pointed out, the entire enthusiasm and excitement in the cap goods space. 6% higher as we speak, going past 1200.
Yeah, CK, that's your positional call for the day.
That's actually the chart of the day that I wanted to feature today. L&T had a very nice breakout upward out of two sets of resistances when it got out of it at about 1180, 1190 levels today. And when typically a chart, a price pattern of more than one format is, the stock stages a breakout past that, the run is usually pretty decent because it adds a lot of momentum. And if you examine momentum charts of L&T also, you will find very good signals of strength there. So I think 1225 to 1240 is the bare minimum that I would expect L&T to reach. So have no hesitation in recommending a buy. But it has run along a little since I sent you the chart. So maybe somewhere closer to 1200 ought to be a lesser risk kind of position to buy it.
Okay. A lesser risk maybe, but not completely off the mark, even if you want to look at it at 1206. But 1200 is probably a better bet as per what CK seems to be recommending. Okay, Mayuresh Joshi, of course, joins in with us as well. Sandeep Sabral, of course, is with us. And, Mayuresh, I'll stick to stocks because there are just so many that are moving around while the index is doing what it is doing. By the way, the index is up 100 points, the Nifty, that is 104 points. But Mayuresh, I was looking at the kind of moves that are happening in a lot of these beaten down names. Of course, the rising tide is carrying everything. The one that stuck out is Just Dial. After hitting lows of 370 or 380 or as it was, it's had a big move the last couple of days. In today's session, a really massive move. Fundamentally, they've launched that new service or app as well. Fundamentally, what's the call? Would you be comfortable investing in a Just Dial?
Clearly, Neeraj, as you mentioned, I think everything's moving in these markets. And with the new app, I think what I'm more interested in looking at is numbers coming through. So what they had probably envisaged at the beginning of the year and what they're getting at the end of the fiscal year, I think the story appears to be very, very different. Now, if there is any improvement happening in the numbers because of the new app, the kind of capex plans that they've got, the feet on street that they probably need to expand, I think all these factors should work positively for the stock as the management expects it to. But clearly, I think I should be looking at numbers, and I think I'll wait for Q4 numbers to come through as well as Q1 of the next fiscal before determining whether the consistency in trend, whether their mojo is back, whether they're regaining their market share, how are they facing competition. So before that, I think I'm not going to take a call on the stock at this point of time.
What about Just Dial on the charts, Manav? Let me come to you for that.
Actually, this stock has been in a very great momentum. The kind of a rally that it has already seen from 375, and also looking at on the short-term perspective, the momentum is likely to continue in the near term. Definitely for a short-term trading opportunity, the risk-reward ratio will not be favorable. But if anybody holding on to this stock should continue to hold this for another 30-40 points on the upside, I think the stock would test its next target, which is close to the levels of 665 to 680 on the upside, which coincides with its long-term moving average.
Okay, let's just focus on the one space where there's definite visibility on growth, which is TCS and Infosys. And, the Infosys, of course, got a couple of upgrades earlier on. Sandeep, just because there's so much talk about banks and infrastructure last couple of days into the budget, that IT has taken a bit of a backseat, but it's come up today. Do you think that there's pent-up demand for the sector in this rally?
I think IT is one sector which will clearly keep on doing well. And what we saw was that it got unnecessarily battered, and mainly due to ETF selling. So specifically, if you see stock like TCS, Infosys held on, but TCS got battered despite the management coming out and saying we'll do well, we will do better than the industry, etc. And plus, if you see 1 year rupee movement, rupee is around 9% over a 12-month period. So that obviously aids their margins going into next year. So the IT story is pretty good, and I would say that the frontline ones or some specific ones like KPIT, because of what it's doing on the clean vehicle side, could actually do very well.
Actually, KPIT is also now become a trader-friendly stock by virtue of its entrance today. I think I was just looking at the open interest positions. It's doubled on a small base, of course. But why do you like KPIT, Sandeep? I mean, you gave a brief about doing something on the renewable energy front, so to say, but what is it doing? What kind of earnings traction can come in? Any thoughts here?
See, I think KPIT got hit mainly because of the fact that energy was a very big vertical for them, and that really collapsed. And as a reason, so the stock fell from 200 to 100 just because of that, or slightly below that. But they've been doing a lot of R&D on this electric vehicle front and this clean energy front. And there's apparently a lot of interest going around this. So we still need the revenues to come out. But the revenue potential and the margin potential out of that could be very substantial. So the option element which is built into KPIT is very strong. So even at these prices, it trades at, I think, 9 or 10 times earnings without the upside of these things. So if these things come out, then the stock could actually do very well.
Okay, I just want to mark, there was a flash on Adani Port, of course, is a stock that we've already discussed at the day's high, 4% higher. But there's also been a fair amount of activity in the ADG group of stocks as well, where there's been a reasonable spike. But Mayuresh, I wanted your specific view on M&M because, after 2 days of a fall, there's been some traction there as well. And while the SUV business faces competition, what the government has done for the rural side of the economy could help their tractor business. Would you take a contra bet on M&M? Of course, Mr. Anand Mahindra has quite vocally said that, this infra cess on petrol and diesel cars is perhaps not the best for the sector. But do you think there would be perhaps in the reshuffle the rural side of the business that can benefit?
Afternoon, Tanveer. Yes, I think if the monsoons are better than what one really expects this time round, with 2 bad monsoons that we had witnessed, the farm equipment solution business or the rural business of M&M on the tractor front should do well, at least on the base, if the rain gods smile on us. On the other SUV business and the UV business, what has happened with the cess increase is that the pass-through is very, very obvious. Whether that will impact volumes, in our opinion, I think the impact will be neutral or very, very marginal. Having said that, probably I think the KUV 300 and the TUV 300 as well, I think are getting accepted quite well, and that probably augurs well for the stock. Clearly, how the numbers have panned out, at least for the month gone by, I think more or less in line with expectations, and valuations again, in my opinion, are quite reasonable if you compare the historical averages. So yes, I think we do have an accumulate rating on the stock. I think the upside is still around 12-13% from the current levels. But in my own opinion, I think one should really wait for the stock to consolidate at lower levels. Look how the numbers pan out for the month of March as well. And I think that will give an indication in terms of how the UV business is panning out for M&M. And again, I think you need to wait for a quarter to understand how the rains are probably progressing, and that will have a positive impact on the tractor business as well. So yes, I think an accumulative rating is what we've retained on the stock, but clearly I think we do not believe any significant upsides from the current level.
Just Dial rising from 377. By the way, aside of Just Dial, there are some other specific names. Tata Sponge, for example, is up about 17.5% in trade. There is a lot of traction in Delta Corp today, 13% higher at 64. Some strength, as we spoke about, in some of these offshore and shipping companies, Jewel Offshore, Aban Offshore, GE Shipping, etc., are all moving up in the session today. So that entire basket has not done too badly for itself. It's not the favorite basket, Sandeep Sabharwal. Global trade has not really come back with a bang. Maybe just a bit of, not necessarily short covering, but a movement up from the lows. Would you touch them, the shipping or the offshore company?
Shipping and offshore are different ball games.
Yes, they are.
So I think GE Shipping has a different model, and they tend to do decently well across business cycles. I think that's a different basket, so I won't put it in the entire offshore basket. Specific to the offshore companies, I don't think there's any great story that's going to build up. I think the rig counts are still going down. I think exploration activity will still remain very subdued or even go down further going forward. And the rates which they get are going to remain subdued for a very prolonged period of time. So it's more sentimental, and I don't think any long-term investor or even specifically any retail investor should be playing these stocks.
Okay, so Manav, let's nail it down to some specific ideas then. So many stocks flying around. What is it that you are recommending for our viewers today?
See, at the current levels, we like Ambuja Cement. If you look at the charts on the monthly scale, the stock, after consecutive 10 to 12 months of decline, it has finally showing some sign of a bottoming out. And also when we look at on the daily charts, it has given a breakout from its short-term descending triangle pattern, which further confirms reversal formation. And also when we look at the volumes, it is also indicating that the stock is actually likely to see a move of at least 15 to 20% in the near term. So Ambuja Cement could be one stock that one should definitely look at buying at current levels. The other stock for a short-term trading opportunity would be Petronet. The stock actually has been in a very good uptrend since quite some time, and recently the stock has seen already a good bounce from its lows of 230. I think with looking at the charts and the structure, this stock is likely to retest its previous high of 260. So one can also initiate a long into this, keep a stop loss of 240 and remain long.
By the way, Infosys has just come off from the levels that it was trading at. Keep that in mind. It's just TCS is still holding out, but Infosys, I think, just went off. Okay, a bit of a bounce back, a bit of a volatile movement there for Infosys. The other stock on an intraday basis, which has done well, as I see the screen, is ILFS Engineering. Sudden pickup in that stock as well. So the intraday looks fairly interesting. Already spoke about Delta Corp. That stock is looking okay for itself. In a bit, our research team members would join in to speak about what dealing rooms are recommending in the session today as well. But CK, just before we get in the closing strategies, if you look at the markets today, undoubtedly, it's a bit of a Metallica out there. Almost all the metal names, very good volumes, very good price action. And, stocks like Tata Sponge, etc., too, have come up and done extremely well, up, say, 17-18%. If you had to choose a metal name for a trade, if you do, which one would it be?
Well, I already chose Hindustan Zinc as one of the favored buys. I would definitely look now. It would really depend upon what type of player I am. If I am a long-term player, then JSW Steel certainly qualifies, and I think that's a stock which seems to be hinting at even possibly new highs, something which doesn't really fit in with the current scenario, but yes, that's what the charts are indicating. If I'm a trader and, an individual trader, then I would stick to Vedanta or Hindalco, which have got great deal of momentum. And if I am a more pedigreed player looking for value as well as some fundamental strength, etc., and like larger setups, then I think maybe Tata Steel on a bit of a pullback, not at 285, 286, but certainly around 270, 75. I would then look at Tata Steel. So depending upon what's your where you are in the scheme of things in the market, you can pick and choose in the metal space.
Okay, Dr. Narayan, stay on with us. Let's quickly go across to our research desk where Darshan and Ajay are joining in with a quick snapshot of what dealers are recommending in the 10 minutes of trade left. Darshan, come to you. What is it that you're picking from your sources? The market is, putting its might together to touch 7,500 before close.
See, that is right, because even if you're looking at the FNO trends, you can see how aggressive the put writers are in today's trade. Almost 17 lakh shares have been added on the 7,400 put, indicating that the support is clearly moving from levels of 7,000 right up to levels of 7,300, 7,400. So the market is clearly showing very strong signs. Some of the stocks that dealing rooms have indicated, we spoke about Bosch in the morning. It's trading at the day's high. Dealers indicate that there are buy orders from some of the domestic mutual funds. They believe that the selling has been overdone in Bosch. They are indicating there is accumulation. Mindtree is the other counter, but there are two reasons. First of all, dealers indicate that some of the funds are looking at Mindtree, and if you're looking at the FNO trends that are there in Mindtree, open interest build-up is extremely high, indicating that there is accumulation that is happening in Mindtree. And finally, Adani Ports is something dealers are talking about. The counter has managed to surge significantly in the last 15-20 minutes of trades, and on the basis of technical trends, dealers believe that the upside is possible in this counter.
Watch out, it's CK's positional call as well. Almost everybody has a consensus bull call here on Adani Ports, so do watch out for this stock. Thanks for that, Darshan. Ajay, what is it that you're picking up from your sources?
Neeraj, there's a ferocious short covering rally which is going on in India and abroad. So dealers are saying that quality is actually the one which is rebounding faster, and HPCL is one stock, among quality companies, particularly because the GRM picture is looking good. In fact, BTST recommendation coming in this particular day, this particular stock did not really participate. Look at the intraday graph. So the up move continues. HPCL is likely to react nicely. A nice rebound is expected tomorrow. So look at that, a flat trade. And if you look at the last 6-month graph, you would see it's from 900 plus levels, it has come down to 730. So rebound scope is being seen in HPCL. Look at that, hardly any move compared to the 6-month graph. The quality stock. Watch out for that. Apart from that, JSW Steel, that one did not really participate in the fall compared to the other metal counters, and now it is going even more stronger because of the languishing plants also, which got restarted. So there is some fund buying which is happening in this one, a space which is not very overowned right now among the funds, but now we understand that some positions are being built. So watch out for this one as well.
Yes, indeed. In the star of the session, Ajay, you would agree, is Just Dial. Almost an 80% recovery from the lows in Feb, and look at that stock right now. I think nudging a 20% gain in trade. That's a move from 560 to almost 670 in the session as we speak. So mighty performer in trade. Let's get in closing strategies as well. 10 minutes of trade left. Dr. Narayan, what would be yours?
Well, I think Pidilite was expected to move today, but it's held pretty steady. 6056 is where it is at. I do believe that there is an uptrend in the offing here in this name, so maybe a BTST in Pidilite at the current price of 605.6, stop loss at about 599, targeting 620.25 by tomorrow.
Interesting. Pidilite, which is flat right now, is CK's top closing strategy. Mitesh, what about you?
I would choose a BTST and Bharat Forge. Keep a stop at 820, look for 840 as the target for tomorrow.
Okay, Bharat Forge will come up on your screen. Let's have the buy stamp there as well. Up 5%, and that is Mitesh Thakkar's top call. Manav, you've given us 3 or 4 names, but if you had to choose one stock for a trade, just before we thank you, that one top closing strategy, BTST or STBT, what would that be?
It will definitely be a BTST seeing in such a scenario. So I think Larsen really stands out. It has given a breakout from its inverse head and shoulder pattern, and I think in the near term the stock is likely to see a very good rally. The momentum is looking good since it has bounced from the oversold level. So a stop loss can be placed at 1180 on the lower side, and one can keep an aggressive target of short term could be of 1240, 1260, but in medium term 1350 is very likely.
Okay, thanks a lot for that, Manav. Really good of you to join us and give us that perspective. So many stocks that are moving around, but just before I get to Sandeep Sabharwal for some of those, and maybe Mayuresh also for a fundamental idea, Mitesh Thakkar, you track Delta Corp very closely. It's been having a one-way run along with the markets from 50 to 63 now. Would you trade Delta Corp?
Disclaimer here, I think I personally am a shareholder over here. I think it's managed to get past 60. That was important to capture that level. I think the next port of call should be close to about 68, and there's also a good chance that you might even see 74, 75 over here. So in the short term, clearly the trend is turned on the upside.
Mayuresh, 2 or 3 businesses on which people have some doubts about what the near term or the medium term earnings could be. New listing Quick Heal up 20%. Just Dial always under a cloud 19.5%. And there is Inox Wind, which is up 18.5% today at 282. Do you track any one of these 3?
Again, I think individually, I think all these businesses have been going through some level of stress. Just Dial in terms of how the numbers are panning out, as I mentioned earlier. Quick Heal with issues cropping up related to corporate governance. Inox Wind clearly was something that we preferred earlier. It has disappointed in terms of how numbers have panned out, and the stock has corrected way before we had actually recommended that. But clearly, I think in terms of expectations of business, we still expect reasonable business to come through in terms of order wins. They've got visibility close to 5,000 megawatts of site acquisitions. And clearly, if you look at how their top line is expected to grow, we still believe a robust earnings growth can be expected. There are no royalty payments in FY16, and that leverage benefit will work on the EBITDA margins, which should sustain around 17.5-18%. Valuations become extremely compelling at this point of time. But again, I think numbers is something that have disappointed, as I mentioned earlier. So long-term investors should have a view of at least 2 years. And my own belief is that over the next 2 to 3 quarters, I think the earnings recovery should come through for Inox Wind with the new capacities coming in Madhya Pradesh. That should also have a bearing in terms of how their output will pan out, how the order execution will happen, and how margins will probably improve over the next few quarters. So Inox Wind is something that I'll still be optimistic about from the current levels.
Oman Logistics is up about 13-14% as well. I think actually the logistic companies have had a good move in the session today. As we start wrapping up the market, Sandeep Sabharwal, a word on the logistic plays. The much favored pocket when the whole GST jig was on. Somehow they've lost all kind of favor with market participants, and therefore the valuations must be very, very reasonable. Do you have a particular play that you like here?
Not really, because I think overall, if we look at the stories in the basket, I think VRL Logistics was one which looked okay, but there also the growth is not coming through. In rest of the companies, there is no clear distinctive model, and the competitive intensity is increasing a lot. So logistics, it looks like a very sort of sexy name in a sense, that logistics plays are good plays for GST. But actually, if you go and understand their businesses, most of them are just doing very standard kind of work, and the big growth was coming from this e-commerce, and most of these e-commerce companies have started their own logistic arms. So there's no big story per se, and whenever the GST story will come again, we'll again see these stocks rally. But I don't see the earnings visibility being there.
Okay, you don't. Okay, last 3 minutes left, and let's do something that we used to do in the past and stick to one large nifty name with each of our experts, the top loser or the top gainer. In this case, I'll stick to the 2 top gainers. And we've discussed most, but Mitesh, this one is coming your way. Dr. Reddy's, would you carry home longs if you had them?
Yeah, it was also recommendation in the morning. I think, has given a swing breakout. I think I would look at targets close to about 32.50 to about 32.65-70 over here. So I think, yes, I would carry home long positions.
Would you carry home long positions in BHEL if you had them?
Well, with strict stop loss, I would. I'm not enamored about prospects of BHEL, but then right now momentum is there. Markets are in fine fettle. short covering is going on, bargain hunting is going on, but strict stop losses, I do believe the burst is not yet over. This is intermediate bottom, played for what it is worth.
Okay. You're looking at the Nifty closing at about 1.5% higher, ran about at the high point of the session, which is encouraging. The mid-cap and the small-cap indices are also making gains in the session today. As we draw towards a close, it's really about metals. Yesterday it was about banks, and we've been telling our viewers that today it's really about metals. The metals index is the top gainer. Not the bank nifty, but the metals index. The NSE metals index will come up for you on your screens, and that's made a gain of 5% plus. So fair amount of excitement there. So the rally has largely been led by the metals pack. Vedanta, Tata Steel, Hindalco are the top performers in the session today. That constitutes your top gainers. Then there's L&T and BHEL, which lend support to the market. So there has been buying interest coming into the badgered names. Cap Goods has been lagging, so there's been some participation from there. Tata Motors 5.5% higher. Dr. Reddy's on that anti-nausea drug, US FDA approval, 5.5% higher. Adani Port, good move coming in on that stock as well. TCS Infosys participating in the market move too. But the top 10 gainers are really metals and derivative businesses, infrastructure broadly, and cap goods. To the losers, few and far between, Ultratech Cement and ICICI Bank. But I think today is a day where we can again, for the third session, since the budget, focus squarely on the gainers because there's just so many of them. And Just Dial, I think, beats them all straight down.
You bet. It's been a really impressive move for that one, and really impressive move for the market as well. I dare say I was thinking maybe we'll not have 1.5% uptick, but we've had 1.5% uptick today as well. Spectacular week. Probably one of the best that I've seen in recent times, at least in terms of percentage gains. Remember, the globe is a bit soft though, not down, but a bit muted today. So wonder whether this can continue tomorrow or no. But the force is very, very strong. On the mid-cap end, Tanveer pointed out Just Dial doing very, very well. We've marked almost all the others, but just for the benefit of people who are just tuning in, Tata Sponge 17.5, Jubilant Life 15.5. All the offshore companies, Aban, GUL Offshore, etc., doing very well for themselves. After a very long hiatus and a correction, Delta Corp is amongst the top gainers on the Nifty 500, so doing okay for itself. And everything metals, Tata Sponge, Jindal Steel, Nalco, Jindal Saw, all of those stocks have done very, very well for themselves. Are there sore spots? Not really. Maybe not. Apollo Hospital is down in the session today. SKS Micro has corrected about 3% in the session today. Capital First has a bit of a pullback today. DCB Bank has a bit of a pullback today. But that's few and far in between. The day well and truly belongs to the gainers. Okay, let's get in some sane advice from our experts. So all four of them still with us. Sandeep Sabharwal, today I'll start off with you. At 6,900 or 7,000, the market presented a really good opportunity for long-term investors. Now we are almost at 7,500. For argument's sake, I'm saying we are at 7,500. What does one do now? Because aside of the fact that it is slightly more richly valued than what it was, there is also this risk of a bit of a pullback, if at all it has to come in as well. What would you do if you had to invest some money right now?
So I think from long-term investors' perspective, 5-7% move shouldn't matter
Agreed.
so much. So, but from short-term investors' perspective, it doesn't matter. So I think the question is more from short-term investors' perspective that they
or
didn't
tactical investing.
Yeah, so they didn't come in at 6,900. So what should they do at 7,500? So my guess is that the first leg where the markets could stall is 76, 7,700. I think at that level, market should stall a bit. But at that level, I believe the rally will shift to the other broader market. So we'll see the small caps, mid caps at that stage starting to do well. X of these F&O mid caps which still did well, I think it will spread to the rest of the market. So there's still a lot of value in rest of the market. So most of the stocks we were talking about, like ICICI is up 20% from the bottom, and a lot of other stocks are up 20% from the bottom. So there's obviously a risk for the short-term guy buying 20% high. It could be a pullback of 5-7%. So as the markets approach 76, 7,700, the better idea is to go in the broader market. And where you were looking to buy some stock a month back for, let's say, 100, today it's at 70, 75, so it has value. And I believe the rally will spread to that segment pretty fast.
Okay, fair enough. I don't know whether we can bring the this week chart up for the benefit of our viewers, but we're closing into almost a 10% gain from the lows of about 6,900. Of course, that's once we go past 7,500, that is, but that's a 6.5% move this week. Yes, that's a this week chart. So we've done about 6.5% already from the lows. So, almost about 3.5% more, and we will be home to that 10% rally that the markets, that market participants were actually anticipating once the budget event was out of the way. Dr. Narayan, does that come this week? We have one more trading session to go.
Why are we overlooking that fact? The week ain't over yet, and we are already talking about the gains. I think the way the market is closing is clearly indicative of the fact that there seems to be an inclination to go even higher. We are the ones who are putting some figures on the top of it and saying, consensus 7,500 and all that. But the market has to prove that. Now, one of the pointers that we generally get if we are heading into a resistance is that the smart set among the option traders, they start writing the higher calls. So if you notice today, the 75, 50 calls, etc., hardly any activity. So I think even the call writers who are pretty nifty lot, but then they are also a little shy of going against the trend which is on right now. It seems to be pretty formidable. So I think we should probably expect some more gains. It's a weekend and it's a week wherein we had fantastic gains, and the shorts are still smarting, and I'm sure there are many out there, and many of them may be forced to close out by their brokers or whoever is handling their accounts. So I think we should be seeing some amount of action tomorrow, which would most probably be further upward. So I wouldn't really write off this week quite yet.
Mitesh, the commentary until yesterday was that all shorts are not yet out of the system. People have not had started initiating longs. In some degree, I've seen long positions getting added on beaten down stocks on specific sectoral indices as well. Do you think this rally has more legs to go in the immediate term? What I mean is, tomorrow, next Monday is a holiday, but next Tuesday, Wednesday, do you believe we'll be at higher levels than where we are currently?
Trust me, I can't predict that. But eventually we should be higher. I think this rally, look at the force and the momentum and look at the way indicators would shape up on charts if somebody's following them. I think very clearly this isn't over as yet. We have not seen any kind of distribution. What we did see was some kind of accumulation, some kind of extremely oversold patterns which have got reversed. And I think, we've yet to, not showing any kind of signals of a slowdown on the intraday charts or any kind of pause being taken. So maybe, there could be a day or two of consolidation. I think that's a very normal thing to expect after the 3 days of very strong gains. but to say that this bounce back is over, there is no signal of that. The indicators, the averages are all pointing on the upside, suggesting that further highs should be made. We've just not started the process of higher highs and higher bottoms. We've just had a rally which is a V-shaped rally without any kind of break. So maybe one of these days we'll get an intraday high and possibly a pullback for which might last for 1 or 2 days. But I think the process will be of making higher highs and higher bottoms, and therefore I think I maintain targets of around, we've talked about 7,500, but I think 7,580 looks a very logical level, and I think we might even go beyond these levels.
Mayuresh, what would you be doing? Would you be still investing at the levels on specific names despite the rally that we've seen already, or would you wait for a tactical pullback if it were to come in the first place, which seems very unlikely right now?
It seems unlikely, and clearly I think if you're a long-term investor, I think such a move should not be perturbing you. Having said that, I think stock-specific action is still something that I'll be looking at and allocating 15-20% of the investable corpus. Within stocks, what I probably like at the current juncture is TVS Motors. We still expect a 10% volume CAGR over the next 2 years with the kind of geographical presence that the company is ramping up with. Our own take is that the market share gains that the management expects to ramp up from 14% to 16% this year and around 18% by 5/17 is on the cards with the new launches Jupiter, Star City Plus, Scooty Zest. They've all received good responses. So again, I think we're expecting a 16% top line growth, a 50% bottom line growth on a CAGR basis over the next 2 years. We expect the margins to improve by 220 pips, close to 8.3, 8.4% mark over the next couple of years by FY17. And clearly with the non-moped segment doing well for TVS Motors and the BMW Association, our own take is that the top line growth should be equally good as well. So TVS is something that I'm preferring at this point of time. Again, I think with the government focus and thrust on infrastructure and rural spending, our own take is stocks within the EPC play should do extremely well, and that is a theme that I probably liked. Within the EPC players, PNC Infratech is something that I am really bullish upon at this point of time. Strong order book of close to 3,775 odd crores, which gives revenue visibility of 2.1 times over the last 12 trading months average. You're talking about EBITDA margins sustaining between the 13.5 to 14% kind of range. And clearly, if you look at the two businesses that has got EPC and the BOT business, our own take is that the EPC business should be valued anytime 14 times FY17, which gives it a value of around 455 to 460 odd rupees, which is very close to the market price of PNC at this point of time. So you're basically getting the bond businesses free, where you're valuing it on a free cash flow to equity shareholders methodology. And if you take the cost of equity at a very minuscule scale, our own take is that the bot projects, 3 of which have commenced in the last quarter, should contribute northwards of 100 rupees. So clearly PNC is something that we're liking both from an earnings perspective, from a leverage perspective, as well as from a valuation perspective.
Okay, gentlemen, thanks very much for joining us and giving us those insights to the market. Really appreciate your views as always. We'll take a short break right now. The India VIX has cooled off significantly, down over 5%. So you're looking at the market moving higher, volatility stabilizing. That's just indicating that the bias is definitely towards the positive. And 6.5 from the lows of the start of the week, where we actually broke below 6,900 on budget day. What a comeback really for the market. Let's see where it's headed beyond 7,500 once it conquers that level. We'll tell you that after the short break.